What's going on, everyone? This is Stephen Place, the lead strategist at Market Traders Daily, and today we are going to call a bottom in Tesla. Wish me luck. So Tesla has not performed alongside the rest of the NASDAQ very well. Things like Nvidia and Microsoft and Meta, they're all ripping higher, and Tesla is at lows of the year. It's towards the lower end of a trading range. We'll get to the charts in a second, but we are coming into a very key zone that I've been watching for months, and now that we're hitting it, we can start to make the case for some kind of a bottom. Okay, so we're going to look at the current setup in Tesla. We're going to show an analogy with how Nvidia bottomed out back in 2022 and some potential trades that you can look at. All right, so let's hop over to some charts. This is a daily chart of Tesla. There are a lot of lines on here back from the trading range back in 2022. Now, for some reference, I've had some pretty good calls on Tesla. I've had some terrible calls, but the ones that I'm known for, I did call the exact top on Tesla on November 4th, 2021, and that was related to some options flow and how the call options were squeezing the stock higher in a gamma squeeze, and it was getting a little too over its skis, and then the whole thing fell apart. I also did call the bottom on basically, what was that, December 2023? Did I say that right? No, December 2022, where that yellow arrow is. I recommended the February 175 calls to my clients. Those were trading at about $1.34. Into February options expiration, they were trading at $33.20. So $134 to $3,320 is not too bad. That is a 2,378% gain. So it's not one that I swing for the fences very often. I don't make bold calls like this very often, but we're getting close to a point where I think it makes sense. One of the things to point out is that everyone is going to be watching the prior support levels, and there might be enough people uninformed saying, I'm not going to buy right here. I'm going to wait for that one more push to the downside, but I don't think that's what you want to look for. So to give you an example of what I'm talking about, we're going to go to Nvidia, and we're going to look at how the stock traded into the bottom in 2022, back when the stock was trading at $116. The stock it's a $700 stock now, so it's done exceptionally well off of those levels. But what we can do inside of TradingView is basically back out the price action to before that bottom happened. And I want to point out these big levels that developed. And I'm going to try and set up, let's see. We're going to, where's my rectangles? There we go. So we look at liquidity at Market Traders Daily and through my service, Precision Volume Alerts. And the way we look at liquidity is not volume by time, but volume by price. That's our trading roadmap. That's what the bars are on the right side of the screen. These are also known as volume profile or VRVP and some other things like that. So I want to point out there are some pretty key volume levels underneath the current price of the stock. Now the stock, this was in 2021, the stock had a really nice push up to 330. A lot of people were buying GPUs because of the crypto craze, and then that got a little over its skis and the whole thing fell apart. Now the question is, where can the stock trade into? And if we have areas in which there's been lots of trade action in the past, we see that footprint in our liquidity profile. And if there was an area where there was a lot of action on an institutional basis, oftentimes the stock will push down into that level before finally rolling up. Now, at the time, the stock was trading at 280. The downside target on this is something around $120. Did I, at the time, think Nvidia would go all the way down to 120? No, but that's basically what happened. So what you want to see is the stock auction into a big prior liquidity level and then start looking for evidence of failed breakdowns and maybe some institutional accumulation along the way. So if you look at how the stock traded down into these levels, all right, there's that yellow rectangle again, and I'll just bring the whole chart up. there's a very interesting mechanic here. A lot of people call these inverse head and shoulders patterns or bottoming patterns, cup and handles, whatever. But what tends to happen is that the stock will push to the downside through that prior liquidity zone and then come back up and bounce past it again. And if the stock can then pull back to the upper edge of that liquidity zone and hold, that's the evidence that you need to say, hey, you know what? This stock's putting in a longer term bottom. Maybe I should start taking advantage of that. Okay. And that was back when the stock's trading at 140. Now it's currently trading at $700 or something absolutely insane right now. We did see something very similar in the S&P during this correction in 2023. So if you look at the top from right here, okay, and the liquidity profile here shows clear as day where the most action was traded into this yellow rectangle right here. Okay, now from that level, what kind of correction would that be? About a 10% correction. That's pretty normal for the S&P. And if you look at how the market traded into that, it was basically a straight bounce. Once we got to that level, there was also the swing anchored volume weighted average price from the October lows that came into play. But that's why we look at those large liquidity zones. Some people call them points of control or high volume nodes. I'm basically looking to say, have institutions traded the stock at this price before? And if they have, that means there's a very high chance that they will interact with that stock again. Okay, so let's take a look at Tesla. And what I want to do is just anchor off of this high right here. So this is July 2023, and that was basically the top of the market. All right, and so what we can do is look at the current liquidity profile at that top. All right, so the reason we're going back in time is because we're looking for those footprints before more trade action has happened. And what you can see is that there is a level that sticks out clear as day, right around 180, okay? And there's a second level just underneath that might come into play if the stock really does want to see some decent pushes to the downside, okay? Now, let's fast forward to how Tesla is trading right now and where we are. Okay, so we're right at that first yellow zone. That is where the most action took place within this trading range. That's where the institutional liquidity sits. And as we've seen with NVIDIA and the S&P and countless other examples, this is a really actionable place to start considering some long opportunities. So what you want to do now, you don't have to blindly buy the new low and say, oh, I hope for the best. That is possible for right now. If you do want to just pick up some calls, I think it's okay. But you want to start looking for some evidence of failed auctions to the downside. All right, what does a failed auction mean? It means you have an obvious level and then you see a hard push underneath that obvious level that fails to see price action follow through to the downside. So after its earnings event, Tesla traded all the way down to 180.5. And there was a second push on the 5th of February underneath that level, but the breakdown failed. All right. And then the next day you have this gap down underneath that 180.5 level again, and then the breakdown failed again. So right now, we're starting to see evidence of failed auctions to the downside. All right, so the question is, what kind of price target are we looking at? One quick options related thing, a lot of people go to 0 DTE options, or they're using weekly options or things along those lines. What I've found is that if you want to capture the meat of a trend or the meat of the drift, going 2 to 3 months out in time and picking up out of the money options will get you better risk adjusted returns than trying to day trade these 0 DTE options. All right, that's just my personal opinion. But the way that the market tends to work is that we will see pushes from one liquidity zone to another. All right, so the current liquidity zone that we're in is right around 180 and change. And the next liquidity zone is pretty close to that gap fill back at 210. And then the bigger liquidity zone is, basically any bag holder who still owns shares between about 235 and 265. All right, so most likely if Tesla does run, it's not going to get above 235 anytime soon, just because there's a lot of investors who own that stock at 235 And as the market rallies into that, they're going to say, oh, thank goodness I can get back out of break even, I can reduce my exposure, and so on and so forth. So the initial target for me is going to be the next liquidity zone right around 210. And then you can start looking at something like 230. So what I would be looking to do if I want to structure a trade is either let's see, we're in February now. So I'm looking at the April 230 calls, the April $230 strike calls, I think offer pretty good risk reward for some kind of a fast move back to the upside. Okay. Now it's possible that I look like an idiot. This whole thing falls apart, and that's just how markets work. You know, you don't have to be right 100% of the time. Yet, given the kind of stretch that we've had down to a key level that we've been watching for months, and the kind of price action that indicates a failure to follow through to the downside, leads me to believe that, you know, we can shoot for a gap fill and be pretty good right here. If you want more action like this, and if you want to see how liquidity analysis and following the institutional flow will get you better odds on your trades and better results on your trades, I have a free training for precision volume alerts that shows you why we're looking at these liquidity zones, how well they work. You've got loads of case studies in there so you can see live trades that did execute during those kinds of times. And I think it's a great resource for you if you're just getting started looking at liquidity analysis. That's all I've got for today. Hopefully Tesla bottoms so I don't look like an idiot. Click the link below this video and you'll get access to that free training. I'll see you on the other side. Take care.